Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news. Markets remain glued to the car crash that is happening in UK financial markets, even if the global implications are limited. Separately, US mortgage applications fell 2.1% last week in an extended downward trend. They're a massive 40% lower than the same week a year ago. This is largely because mortgage interest rates keep on rising, topping 6.8% last week and the highest since 2006. The American Producer Price Index went up 0.4% in September from August, the first increase there in 3 months. Year on year, it's up 8.5%, which is a lesser rise than for August. And the release of the US Fed minutes, always keenly awaited, has brought no ructions in financial markets today so far. The document itself reveals that their policymakers have judged that the cost of too little action outweighs the cost of too much, the American version of a least regrets policy. And Japan's machinery orders had their biggest single-month fall in 6 months in August, falling almost 10% from July, even though they're up almost 3% from the same month in 2021. The global economic slowdown and a weaker yen both are weighing on local corporate spending now. But Japanese machine tool orders rose again in September, however, up 4.3% from a year ago and up 8.2% from August. Export demand remains quite positive for this leading sector. And China's solely fixated on their party congress this week. One good thing is that air quality has improved in Beijing as steelmakers shut down to ensure blue skies for the event. In Hong Kong, they're straining to maintain their local currency pegged to the US dollar. The city's de facto central bank has intervened dozens of times since May as the Hong Kong dollar hit the weak end of its 7.75 to 7.85 trading band on an increasingly hawkish US Fed. In India, industrial production data delivered an unwelcome surprise there. It fell 0.8% when a 1.7% rise was expected. This is a very large miss for them. In the UK, turmoil in their financial markets has intensified after the Bank of England insisted its emergency bond buying scheme would come to an end this week. The cost of their government borrowing over 10 years briefly surged to its highest level since 2008, as investors demanded enhanced returns to lend to a country now in a bad financial and trust crisis. The US Treasury 10-year yield starts today at 3.90% and up 1 basis point since this time yesterday. And the price of gold will open today at $1,671 an ounce. This is down $10 from this time yesterday. And oil prices start today down another $2.50 at just under $86.50 a barrel in the US, while international Brent price has fallen to $91 a barrel. And the Kiwi dollar will open today at 56 US cents and a half a cent lower than this time yesterday. Against the Australian dollar, we're another quarter cent higher at 89.3 Australian cents. Against the euro, with little change to 57.8 euro cents. That all means our trade weighted index starts today at 66.9, down about 20 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9.